Hi, everyone. What is going on with mortgage rates? Tariffs, what do you say about it? No matter what you think, no matter what we say, it's here and it's having a huge effect on the market. As we're all knowing, looking at the bonds, mortgage-backed securities, which means it is affecting mortgage rates, along with our 401k, our retirement, and everything else that we are looking at as far as financials are concerned. So, no one knows how this is going to play out and how it's going to be affected domestically and foreign wide. We're going to get the jobs report, which comes on Friday, which is tomorrow, which means we're going to have some volatility. So, did you know that mortgage origination volume increased 16% in 2025? So the refi, remember those good old days? Um, this is the red part, right? So we had a big refi boom and then it slowed down and then it picked up. They're assuming that it's going to continue to go up because one of the biggest things that's happening now is debt, right? So you have a lot of people who have those 2-3% interest rates. However, debt is really a big thing. So do you do a Heloc, which is a standalone second, or do you refinance, get all your bills together, and lower your payments by XYZ? I say if you're not saving $500 a month, don't do the refinance, sit and wait for it to happen. So the forecast right now is this is 2025, 2026, and 2027, right? Because at the end of the day, people have to sell, people have to buy, and those people who are going to refinance who have the higher rates, right? Because I have people in the fives and the sixes, rates are still in the sixes and the sevens. So can't refinance until we get it. Last year, there was like a little bump that happened, and it lasted maybe 2 weeks. The same may happen again because depending on how the markets react, interest rates could potentially go down, and that's when people are going to consider refinancing. So, will the Feds do the cut? Well, we thought that was going to happen. We're hoping it's going to happen, but we need a recession most of the time. A recession is 2 quarters, right? This is the beginning of the first quarter, April, May, June, first quarter, GDP, and then June, July, and August. So you need those two to actually have a recession. I know you hear a whole bunch of stuff out there in the world. You need two consecutive quarters in order for us to say there's a recession and we're going to reduce the Fed rate. However, um, when we were getting those rates for 2 and 3%, remember the Fed fund rate was 0%. So that's why we were able to have those low interest rates. Right now, the Fed fund rate's in the fours. So that's why rates are continuing to go up. But if you see how this is going, you got the 30-year fix rate, which is here, right? It's going to continue because imagine it was in the eights, and it goes down to fours, then it goes back up. So they're thinking, right, because rates are now in the sixes, that that's where it's going to stay. It may go down, but we don't know when. This volatility is here, so we'll continue to pace it. But if you're interested in purchasing or buying, at the end of the day, when's a good time? Well, right now, housing inventory is tight, but it's growing. So we're seeing more homes on the market. They're staying on the market sometimes longer or shorter, depending on the zip code that you're in, right? So what does this mean to you? Tariffs are here. We're going to see how that's actually going to feel on our pocketbook. But for those who have to sell to buy, we'll continue to do so. They just have to be prepared because we don't know how the interest rate's going to go. They can go up, they can go down, they can stay the same. And they change every day, several times in a day. If you have any questions or concerns, give me a call, send me a text, and I look forward to talking to you in regards to some of the things that are going on.